Good afternoon, everybody, and welcome to ActivTrades webinar, Monday Market Matters, for the 13th of March 2023. It's Paul here, and we're here to talk about how to trade using Trendlines. Just a quick moment to say thank you to those of you who joined us on Friday at the London Traders Show. It was great to get to meet a few of you face to face. I hope that you enjoyed the presentations that I delivered. I hope you appreciate getting to meet Vikesh and the rest of the ActivTraders team there on Friday. It was great to see you all. Here we are today to talk about how to trade using Trendlines. But as always, just before we do that, we have to go through a quick risk disclaimer. Just remember that trading on margin does involve risk, and that you are responsible for your own trading decisions. So what are we going to talk about today? Well, not unsurprisingly, we'll be looking about, how can Trendlines help us with our trading? How do we go about drawing trend lines on a chart? And how do we trade using Trendlines? And how could we create a Trendlines-based trading plan? And then, as always, for the Monday Market Matters, we will check on live markets and see how markets are getting ready to open for the US session, and what was likely to be a rather interesting session based upon what we saw happen at the end of last week with both NFP numbers and some of the, let's say, shenanigans that occurred over SVB and the overall banking system. Daniel's asking, please, I want to get the presentation for the London Trader Show. How can I get it, please? That's great, Daniel. If you contact the ActivTraders team on English desk at ActivTrades.com, just send them an email. They will be able to send you the slides from the session on Friday. So it's great. Hope you enjoyed it, and all feedback, as always, is very welcome. Daniel, thanks for that. So for those who don't know me, my name's Paul, traded for many years, traded for funds, for clients. Primarily, my focus is trading on FX indices and commodities. I tend to be a trend trader for the longer term trading and a reversal trader for shorter term trader, all of which is relevant for what we're about to talk about today. So, as always, what we're doing here, it's Monday Market Matters, and it's us continuing our regular Red Monday webinar series, with the aim being to help traders start the right week in the right frame as we prepare for the opening of the US market as I said, in about 25 minutes time. So each Monday at 2 p.m. London time, what we'll do is we'll always cover a little bit on what's the news coming up, okay, for the week ahead. We also have a major piece on education, something that can help you build your own trading knowledge that you can take forward into your own trading. As always, we'll have a little look at the ActivTrades platforms and tools that are available to you as an ActivTrades client, and then we'll finally take a little look at the live markets as we sort of enter the start of the US session. So there is always plenty for us to cover. There's always plenty for us to discuss. As always, we appreciate all feedback, or if you've got comments about what you'd like maybe to see me have a little look at or sort of share with you, then by all means you can drop that feedback into the English desk at ActivTrades.com email, and we'll happily take that on board. We want to make these sessions as insightful and as valuable and helpful for you as we possibly can. So, as always, we'll start with just a quick look at the news coming up for the week. You hear me say this every week, but if you're a new trader, I don't expect you to be able to analyze the sort of formal economic news calendar that comes out each week, but I do expect you to know when those sort of major news announcements are coming out, because that's what will happen. It tends to induce some volatility into the market, and as a new trader, you want to be in a position to sort of manage your risk first and foremost by sort of knowing when those major, let's say, volatility-inducing events are coming down the line. So, this week with as you can see there's plenty going on there, and what you'll see is that that's just that's a snip from the email that ActivTrades send out to clients at the start of every week, just to basically prep you for the week ahead. ActivTrades are a really very good research department, some excellent analysts there, so be sure to sort of avail yourself of the information that they print out to clients. But what we're particularly interested in is, this week is as tomorrow is we have the CPI, okay, in the US, and that will be keenly watched by everybody to see how the sort of the Fed is dealing with the sort of the issue of inflation, whether they've actually beaten it or whether whether that is effectively stagnating in terms of sort of sticky high in inflation, and of course the impact that will have on interest rates, or what the Federal Reserve may do in terms of Fed rate hikes. Whereas we've had like kind of how should we say, sort of kind of conflicting data over the last week or so in terms of understanding on one element. There might be a talk about what Mr. Powell said last Tuesday in his Senate meetings about how they may have to raise interest rates longer and more, but then equally we saw at the end of the week the effectively the collapse of a couple of banks there, SVB and I think it was the other one, Signature Bank, and also Silvergate, and so that's there's a little bit of conflicting data there in terms of the strength of the US economy, and more of that will come out over these next few days. But as I said, we have US CPI data tomorrow afternoon, and tomorrow afternoon for let's say for UK and European traders, but everyone will be wanting to see what happens there. Then on Wednesday, you've got US PPI data, which will still be watched, but is perhaps not as keenly regarded as a CPI data at the moment. And on Thursday, what we have is we have the ECB, okay, meeting about monetary policy, and well, of course, what the ECB is sort of hinting at is that there might be I think it might possibly be their sixth straight, 0.5% or 50 basis point rate rise in terms of interest rates, okay, and of course that will have a knock-on impact in terms of A, the euro, B, the dollar itself as well. And then we have, to finish the week, we have a bit of EU CPI data as well. Interesting data, but perhaps not as keenly watched as the American CPI data will be tomorrow afternoon, but nevertheless, still important. So, as I said, it's important for you to know when that data is coming out. You'll find that there is an economic calendar on the ActivTrades platform, and elsewhere on the internet. Okay, so there's no excuse not to know the sort of the time and date when the major news is coming in, because as I said, as a new trader, you want to be aware of that to ensure that you can manage risk accordingly. So, having had a little look at the news, let's talk a little bit about our main educational element today, which is about how do you trade using Trendlines. And this is a session that will hopefully be useful for everybody, but I appreciate that if you're a new trader, okay, starting to learn your craft and looking at the many different ways that you can engage with markets, that having a little bit of a better understanding of using Trendlines may well be helpful. And as the slide says, Trendlines are a useful visual tool for identifying a trend, as part of a trader's analysis of markets. They can also, potentially be part of a trading method with the right plan. And that is perfectly true. One of my best and oldest trading buddies, okay, is an oil trader, and Trendlines are a huge part of his particular trading style. So it can be, but as always, it's just being a part of the right plan. And so how can we use them in our everyday trading in a clear and easy way? And today we'll discuss how traders can use Trendlines and utilize them in their own trading decisions. So, we'll explain a little bit about them, how to draw them, and also how you can utilize them to trade, because of course, invariably, we want to see, is there, what's the way that Trendlines can help us in our decisions, and also can they be part of our overall trading plan? And so hopefully that will help educate traders now. And it'd be interesting to know of the people here joining us today for the live session. Okay, great to have you all here. I appreciate we have a truly broad range of experience of people who join our sessions here on ActivTrades, and I also appreciate we have a truly global audience, even though it's the English desk. We have a global audience, wherever you are in the world. We here at ActivTrades hope you're well, and thank you for joining us. And as I said, it'd be interesting to understand what, if any, usage you make of Trendlines in your present trading at the moment. Is it something that you're aware of, okay, but you don't really utilize? Is it something that you see, but actually don't know how to utilize them? It's absolutely fine. It's just interesting. You put comments in the chat box to sort of see there what if any part they play in your present trading plan. So How do we use Trendlines? What is it then? Well, Trendlines are a simple technical analysis tool. We draw on our charts to help us give us, firstly, an idea to analyze a market. They can be used to help define and possibly project possible price trends in all markets. All right, you'll find Trendlines will work on all time frames and all markets, but there are lots of myths and inaccurate information about Trendlines. And really, if you're going to use them, it's important to learn how to utilize them effectively, and that's the key thing. Okay, I sometimes see people utilize them, but not always in the best way. So William says, he uses trend lines and channels in his own trading. That's excellent. That's great to hear that, William. Okay, and hopefully this will just perhaps reconfirm elements for yourself. Okay, and for others, just give you a little bit of insight, all right, into how you can possibly utilize them if you're a new trader. As I said, starting to just learn your skill sets as a particular trader. But as I said, it's important to learn how to use them effectively. So invariably when we talk about trend lines, there was the old trading adage, which is still as relevant today as it was back in the days: the trend is your friend until the end. And what it is a case of that trend lines can help us define the trend and also the possible end of the trend. And it's that possible end of the trend which can help us as either we are a trend trader, and it gives us a reason to effectively close our position, or alternatively it may make up part of a reversal trading plan that allows us to sort of have an idea as to when the trend may be ending, and whether there's a new trend in a new direction that we may wish to be part of. But the truth is, we need to identify and as I said, we need to identify and draw them correctly first. So here I've just got a pen here, and I've just got on this chart. I mean, this is palladium on the 4-hour chart, and what we've just literally just drawn very simple one here, more of which we will do later. Okay, there's lots of tools and lots of platforms in terms of how to how to draw trend lines, which we'll look at when we look at the chart in a moment. But as it says, trend lines can help us define the trend and also the end of trend. More of that later as we go deeper into our session. So one of the ways we can utilize trend lines is firstly identify if there is a trend, and how can we do that? Well, we can use things like technical analysis, we can use moving averages, we can use price action, we can use sort of Dow theory, high highs, high lows, lower highs, lower lows. We can also use fractals, which, if you don't know, that's these kind of small little triangles you might be able to see on your chart. And what we'll be doing a session on fractals as well. But when you effectively see an up fractal like this, it means that high there is higher than the 2 candles before and the 2 candles after it. Hence why you can probably see that there's kind of it's normally kind of V shapes when we see fractals there, because that's what it is, and to the downside as well. All right, and to the downside, as you can probably see there as well. Okay, so what we always say is, what you'll always hear me, just clear this, and what you'll always hear me talk about is, when it comes to a trend, good trends should leap off the chart at you. Okay, they should leap off the page. Sometimes I find new traders, they're sort of trying a little bit too hard to sort of project whether there's a trend in place. They're trying a bit too hard to understand if there is a trend. Okay, as I said, good trends leap off the chart at you, and hopefully you can see in this Aussie dollar daily chart that this was clearly in an uptrend. Okay, the price action, okay, as itself is making higher highs, okay, and higher lows. That's one of the ways until it stops doing that. Okay. We also have price. Price is above, okay, the moving averages. So here in this chart we've got the 20, the 50, and the 200. Price is clearly above those moving averages, and they are all happily in alignment and moving upwards. It's been very clear. And we also have let's just clear this down a little bit. We also, as I said, have the fractals. Okay, here the fractals. If we look at the fractals, are all basically just confirming the major fractals in that particular. They're all higher lows and you're all higher highs as well. Okay, so all that's doing is just confirming that there is, that there is a trend in place. And as I said, for a new trader, don't force it. Okay, don't feel you have to force it. Don't feel you have to really squeeze in the trend. Okay, if it's If it's not leaping off the chart at you, then it probably isn't there, okay? And and all new traders, are liable to make that issue, because they're keen to progress, they're keen to improve their analysis skills, and so sometimes they can force things a little bit too hard. But pretty much like anything in life, if you force things, it rarely works. As I said, good trends leap off the chart, and you'll hear me say that again and again and again. What we want to do then is basically, step 2 is identify if there is a suitable trend line. So, okay, and this is for the new traders, this is what's very important. When we're in an uptrend, when we're in an uptrend, a trend line is drawn beneath price action, and it will act as almost like a level of support. In a downtrend, a trend line is drawn above price action, and where it will act as resistance. And remember that trend lines are they're just another version of support and resistance levels, but operate in the vertical plane rather than the sort of rather than standard horizontal levels of support and resistance. So as we said, let's just here is a case of I have to excuse my as I said, just excuse my my drawing skills. I'm a better trader than I am an artist, okay? But what we're looking at is a trend line would go underneath, okay? In an uptrend, a trend line would go underneath, okay, price, and will act as a support. And on the flip side, okay, when we're in a downtrend, the trend line will get drawn above the price action, where it acts as a level of resistance. So here's just a few additional rules for trend lines before we go into talking about how we could utilize them. Is, as you've heard me say a few times already, all right, should be an obvious trend in place. I also believe when it comes to trend lines that there should be at least 3 touches for it to be a legitimate trend line, right? Clearly, as many touches as possible, is the best way that we would like to see. Okay, that's what we would get to see, but at least 3 touches. So you at least will have the the sort of the kind of the starting point, okay, and also a couple of points there. Oops, there you go, as I said, and you want at least you're wanting at least 3 touches, okay. In that case, you've probably got about 4 touches. You can even get that better, okay. But as I said, I'm just using a freehand drawing tool there. As I said, I'm a better trader than I am an artist, but hopefully you can see that you can get you can at least see the gist, okay. And especially remember what we were just saying, that a trend line should be drawn above, okay, above the trend line, above price action, okay, when we're in a clear downtrend, and it should appear as a natural trend line, and that's that is another thing. So if the trend line downtrend, if the trend line is really kind of very, very steep, all right, just imagine that think that the price action is moving very fast, and if it's moving very fast, well then basically it's probably likely to reverse very quickly on you as particularly well. What I have seen, institutional traders I know who are very keen on trend lines, they basically will always look for trend lines that are effectively, a case that they're either going up, like kind of, they like trends that are going up at 45-degree angle, or trends going down at what would be effectively about 135-degree angle. Okay, I've probably not drawn that brilliantly, but you get the idea. What they don't want is it's almost like it's almost like a kind of a Goldilocks. They don't want the trend lines too shallow. They don't want their trend lines too steep. All right, then 45 degrees, okay, or 135 degrees from the north, from zero is about right. Okay, now remember, what you want and what you get, okay, isn't always the same thing, but if you've got a starting point there, that can help you. As I said, as you've heard me say, you don't need to force it, okay. You don't need to force trend lines. If you're struggling to identify, well then you can utilize fractals as well, okay, to help you with the drawing. And also, they should not cut through candlesticks. My only one exception would be is if there is maybe one particular wick that's going through, and that might be, as we'll see later on, is where prices basically come up and try to test the trend line and then rolled over and fallen away again. But as a general rule, okay, they shouldn't cut through candlesticks, certainly not through candlesticks bodies, okay. And if they are, well then probably there's probably some sort of probably maybe not drawn it correctly. So in his an example, I said this is dollar Canadian on the weekly chart, and actually, what we had was effectively from our starting point, there was actually quite a lot of touches there. Okay, quite a lot of touches there. This one here, Bosch, is where we can see there's a rejection kind of price actually did come up through the trend line, but actually hit the 20-period moving average and fell down again and continued on with the downtrend. As I said, that's the only ways that where we might see price come up and sort of test the trend line and then fall away from it, and that we would allow. But generally, what we're looking for is it shouldn't be cutting through the body. Okay, and as I said, it should have at least 3 touches, but in fact, the more the merrier. Of course, like anything, the more touches that it makes, the stronger that particular trend line will be for us. And that's always a good a good sign for us. To the upside, okay. This is cable pound against the US dollar on the weekly chart. You've got a starting point, and as you can see, you've got a few, you've got quite a few touches there. Okay, that's what we're particularly looking for, and also, the angle of that trend line. Okay, it's not too steep, but then nor is it too shallow either. Okay, it's about 45 degree. Okay, it's about a 45 degree angle, which is the nice. Then that gives us an idea that trend is just is just chugging away nicely. Okay, it's just working its way nicely. Okay, and that's what we particularly like to see. That's our preference. So we don't always get what we particularly want, but you'll see that happens. And then what you might see for, let's say, for the advanced traders is that what you might see advanced traders is that they might put in double trend lines. Okay, and this is where they might have, let's say, this is the standard, okay, the main trend line, but as you see price as the trend accelerates, well then some traders might be able to recognize a tighter trend line, okay, as the price is picking up and accelerating away. And so particularly let's say aggressive traders, the first break, that might be where they make an action, or it's just the first break of the first trend line is where they start to take notice. Okay, so that's probably what you'll sometimes see more advanced traders do. They might have a standard trend line which they project, but also more more advanced one, or okay, in this particular case a slightly steeper one, as we see the trend start to accelerate in sort of in strength as it goes. So we've just had a look at what they are, how they are, what we want to particularly see in trend lines, but of course what we want to be able to see as traders as well. How do we utilize that information to basically give us an insight that we can engage with markets? That's what we're really looking for, isn't it? And my view would be that there are 3 obvious ways to begin with, okay, in terms of utilizing trend lines as a place where you might want to make a trading decision. The first one is where we get a bounce off the trend line. The second one is where we get a break of the trend line. And the third one is what we'd call a retest of the trend line. And we'll just have a little look at all 3 of those. It's, they all have, like all of these things, they all have their pros and cons. Okay, they all have their pros and cons, and it is more about which one particularly resonates with you. Which is the one that you can actually understand the easiest, you can see, and as the one that you would be happy to follow. Okay, the one that you're happy to be follow consistently, in terms of how you look at your own particular trading. So let's have a look at that in these ones in particular. So first one is a bounce off the trend line, and what we need to see is, firstly, we need to see a trend line established. Okay, remember, a trend line is going to be because we are seeing price moving in a trend. In this particular case, you can see here, this is it's a supporting trend line because we're working in an uptrend. And what we're looking to do is, the clues in the name is that we're looking to trade a bounce of every retouch of the trend line. Every time price comes down to that trend line touches, we are looking for the bounce of it. And what gives us the sort of the let's say the confidence is when we're getting price action candlesticks. Okay, they provide suitable entries and trigger bars for us. So things like pin bars, things like engulfing candles, key reversal candles, star formations. Okay, if you start to see them, that particularly helps us. So in this particular case, my eyes are drawn particularly to here we go. I'm just going to draw this particular candle here, which is a rejection candle. Okay, it's an engulfing candle. You also have the same here. Okay, that is it's come down to the trend line, it's bounced off it. Okay, and it's been a particularly bullish candle. Also here, okay, not only did it come down to it, but it was in a nice, excuse my nice flag pattern that was basically also produced that engulfing candle. All right, so that was engulfing candle, key reversal candle before the price actually accelerated. I remember I was just saying that for advanced trades, okay, once the price really picks up, we might be drawing a second trend line to support the acceleration. So it is a case of a bounce off the trend line. Once you've got a trend going, once you've got a trend line, a good clear trend line established, every time it comes back down to the trend line, bounces off it. As I said, if it's got good price action, things like pin bars, engulfing candles, key reversals, morning and evening star formations, these are things we like to see. Okay, so you're getting, and you'll hear me say this again and again and again and again, you get a confluence of events. Okay, you're getting 2, 3, 4 things coming together. That's what gives you the indication that this is a good place for us to want to do our business. The next one, okay, we've just talked about a bounce off the trend line. Now let's take a break of the trend line. That's what we're looking at. Okay, what is the break of the trend line? And with here, what we've got is once a clear trend line has been established, not unsurprisingly, okay, we wait for a break of the trend line. Remember what we said at the start of that old trading adage, okay, the trend is your friend until the end. Okay, and some people say the trend is your friend until the end when it bends. All right, and what we're looking to do is wait for a break of that trend line, and then we look to enter on a close on the other side of the trend line. That's what we look at, in the opposite direction of the trend that we have seen so far. Right, so the important points to know that I would share to you is that this type of trading, okay, it involves the highest risk, but with that the highest reward. And so when anything, you'll hear me talk about whenever you're trading, your first element is to ensure that you manage risk, and you do that with having a good stop loss. So in this particular example, this is palladium, okay, and 4-hour chart. All right, just a commodity. We had, we can see that it was we'd been in an uptrend, but it was, there was lots of moves in that trend line. Okay, no trend is perfect. Okay, it always zigzags until we get this kind of almost like triple top here. Hopefully you can see that. I'll just basically clear these here. We had that kind of triple top there. Okay, where we'd seen we can see that we'd had touches, okay, off this trend line until it breaks, okay, and the break happens here, okay. And as we were saying that, we wait for a break of the trend line, and then you're entering a close on the other side of the trend line. So once we get this candle here, once this candle closes here on the other side of the trend line, on this other side of this supporting trend line, then we're looking to enter here, okay. But remember, the important thing is we need a good stop loss. And so with an enter here, what we want to do is have our stop loss above the recent high, okay, above the last recent swing high is a good place to have your it's a good place to have your stop loss, okay. So what you're looking at here, as I said, because we're just trading just the break and the close the other side of that trend line, it does involve the highest risk. But if you've captured the turning point of that trend, where the trend is about to roll over and fall away, you're also likely to get the highest reward in case of if the move is very strong to the downside. So it's trading. There's no risk. There's no reward without risk. Okay, and managing risk is what allows you to take the reward. Okay, so there's plenty on that. Okay, and a break of the trend line, but that comes down to, let's get rid of this. Once again, it comes down to a very clear trend and a very clear trend line. Don't be forcing it, because one of the challenges with the trend line is that where's a horizontal, okay, like a horizontal support and resistance line, it's very easy to see, okay, it's very easy for people to recognize and trade it. There is a good deal more subjectivity when you're looking at a trend line, because of just the very nature it's a trend line in the vertical, that what we're looking at is, it depends upon how it touches and how the individual draws it. And so, that's why it's important to recognize that it is a good trend line, that it, is working well for you. It's not, it's not just a weak trend line, because if you're trying to trade just a break of the trend line, well, if the trend line's not very good, if it's a weak one, well, then all you do is you just offer up the opportunity that you're not taking the best trade that you possibly can. All right, that's not what we particularly want for ourselves. So let's just move that there. So that was that's the second way that you can trade it. So we have a look at bounce off the trend line, and we'll have a look at break of the trend line. And the third way is a retest of the trend line. And what we have here is, once a clear trend line has been established, we wait for a break of the trend line. However, what we just looked at there in the past was, when there's a break of the trend line, what we do is we look to basically, just take a trade in the new direction. But now what we do in this one is we now wait for a retest of the trend line. Sometimes you'll hear traders talk about this as, kissing the trend line goodbye. And then, and only then, do we enter in the direction of the new trend. So what we have is that, we tend to have a better hit rate than just trading a pure break of the trend line. But the problem you will have is that sometimes, the trend turns, and the trend turns so strongly that sometimes just price will not retest. So in this particular example here, this is dollar yen 4-hour chart, is that, there's a longer sort of trend line in place. Okay, that it was coming down, it was touching, and then what actually happens here is we get a break. Okay, it actually breaks the trend line, okay, this purple trend, and it closes. All right, closes the other side of it. But then what we see how in the next candle, price during that session comes back and retests the trend line. So the trend line is almost flipped. Okay, it's flipped. Whereas here, okay, and here, and here, and here, the trend line is resistance. All right, price comes up, bounces off it, comes up, bounces off it, comes up, bounces off it. Once it's broken, well, then what happens is we see that the price comes down and tests it, and now the trend line is flipped from being resistance, it flips to being support, and that is what we're particularly interested. Okay, that's what we're particularly interested in. It comes down and tests it. All right, and then we see that basically, it closing, there's a rejection candle there before basically price takes off in the new direction. So, as I said, and once you're here, you'd just be trading that as just as a normal rejection candle. Okay, it's a case of that. Again, as I said, when it works, you have a better hit rate. But there are just some times the price will not come back and retest because for whatever reason, is the sort of the trend change has been really strong and it's just not coming back, and then it's just a case of price will just do what it wants, okay, and it's off, and you miss price coming back to kiss the trend line goodbye, and that's what you'll hear traders talk about, it, kiss the trend line goodbye. That is not occurring there. So that is, as I said, it's all about reward to risk. Okay, you might have a better hit rate, but the risk you run is that sometimes price will not retest the trend line, and that's something that you just have to accept as part of the flip side, okay, of trading something like a retest of the trend line. That's what you just have to take on board and recognize that's the nature of the nature of that sort of trading style. And some people would prefer that. Some people, as I said, some people are more aggressive and will just quite happily trade the break of the trend line. But part of it is about which setup works best for you, which is the setup that resonates with you as a trader, which is the one that you can see how holds the most sense and logic to yourself, and the one that you think you could trade consistently. Okay, and what I mean by that is not just trade it on once, but trade it for 20 trades, 50 trades, 100 trades, 200 trades, which is the one that you could do for yourself, because that's what will be required for you to do. So here's a little bit of a takeaway from today's session before we switch across to the live charts. Okay, so go and take a little look at your favorite trading instruments, and it really doesn't matter. Trendlines will work on all time frames and all instruments. So just go away, have a look at your favorite trading instruments, and on your preferred trading time frame. And I appreciate we have people who join our sessions here. Some of them are intraday traders, some of them are swing traders, some of them are position traders. That's fine. And look for periods when that instrument that you like trading, it was trending. And here's just a little challenge for yourself. Were you able to identify good trend lines? Remember, good trend lines are a bit like good trends, as in, they should leap off the chart at you. Okay, you don't need to force. If you're having to force them, probably not going to work that well. And then look at it. Were there good bounce opportunities? Okay, did price come back to the trend line and then put in rejection candles there that gave you an opportunity to trade in line with the trend? Okay, as it bounced off the trend line, or was there good break opportunities? Okay, when the trend line finally broke, was it a good opportunity just to trade the actual break of it? Or were there better opportunities when you were operated with a kind of a break and a retest trade setup, where you waited to sort of for price to kiss the trend line goodbye? So do that. Take away that. The thing about trading this is I'll share you as much experience and everything as I possibly can, but you just have to be able to take that away and just practice. Just give yourself a few days, okay, a few days, and the rest of this week until our next session, and just go through and just work your way through and do that, okay? And it'll just be part of your trading education. The more, it's like anything, the more you practice, the more you do it, the more that will actually work for you. Okay, so it's as I said here, that's a little bit of homework that you can take away to work on, to help you understand trend lines better, and also to work out whether they will be a good trade opportunity setup for yourself. So just before we switch across to the live charts, as it says there in the conclusion there, Monday Market Matters will continue in 2023, and it is going to be an interesting year in markets. I've been saying that for the last few weeks, and we certainly over the last over the weekend, over the last day, stuff, that we've seen some very interesting moves in markets. And as I said, I hope you'll join us every Monday at 2 p.m. London time to enjoy the journey and to be able to share in that and learn from it. When it comes to trend lines, they are a useful visual tool to aid a trader with their, firstly with their analysis of markets, and they also provide trading setups as well. It's clear that they only work well in a trending market. If the market is going sideways, trend lines aren't really going to help you. There's the clues in the name. It's a trend line, so we want a trend. And what we see is that trend lines provide support in bullish moves and bullish trends by drawing them underneath price, and trend lines can provide resistance in bearish moves in that we draw the trend line above, okay, when we're in a downward movement. A trend line should have at least 3 touches, but of course the more the better. And in terms of how you could actually trade utilizing trend lines, well, you've got 3 options. You can either trade a bounce off the trend line, as you use it as an opportunity to join the existing trend, or you utilize it to trade a break of the trend line when that trend line, the trend ends and it turns, or finally the break and the retest, where price will come back and kiss the trend line goodbye before it takes off in its new direction. So there's plenty there to take away and look at and work and utilize this week, all of which will help you enormously. But let's go and take a little look at live market, shall we, and see what's been going on, see if there are any trend lines that have shown up today, and also whether how markets are reacting to the news that we've seen happening at the end of last week and over this particular weekend. So before we do, let's just hopefully you'll be able to join us for, as I said, for next week's Monday Market Matters webinars, 2 o'clock London time. And what we have here next Monday is trading the first pullback. So for those of you who joined me on Friday at the London Traders show, this was one of the sessions that I did in the afternoon. As I said there, what I do is, at the London Traders show, I gave a very basic version of it. And what I'll do here next Monday is, we'll repeat that, but also I will add in a couple of additional slides to just give this sort of, the intermediate traders just a few extra elements that they can build in, that they can utilize for their own trading. So that's next Monday, okay, trading the first pullback we'll be looking at. And then what we're looking at on the week after, is 27th of March, okay, is turn around your trading. And what that means is, as the name implies, is that, all traders will occasionally have, they will occasionally have, bumpy periods in their trading career, just like any career, any job, any work, you'll have bumpy periods where maybe you're out of alignment, or the market isn't in alignment with your particular method, or maybe your money management, risk management isn't as sharp as it needs to be. And so what we'll talk about in that session is, when you're having a bit of a challenging time, what can you do to turn around your trading? That's the important thing. So as I said, hopefully, I hope you'll join us for that particular session. But also, as I said, for those of you who joined us at the London Traders Show, next Monday's session will be a repeat of that, trading the first pullback with a couple of additional elements for the intermediate traders, and I look forward to sharing that with you, ladies and gentlemen. So as always, let's switch across to the live charts. But if you've got any comments, or if you want to speak to your account representative, well then remember you can call the English desk there on the 0207 6500 567, or you can email them englishdesk@activtrades.com. If you've got feedback or comments or thoughts on these sessions, please, we'd all really like to hear them. Or maybe there's subject matter that you'd like to see me cover because it would help you in your own trading journey, then by all means, please send that across. You'd be very, very welcome. It'd be great to have your comments and thoughts and feedback. As I said, we want to make these sessions as beneficial and as useful to you as possible, ladies and gentlemen. And so that's what we'll look to do. So if you will bear with us for a moment, what I'll do is I will switch across to the ActivTrades platforms, and we'll have a little look at the markets themselves. So just bear with me 1 second, and we'll switch across. Excellent. So what we have here is, I'm hoping that you can see the ActivTrades platform here, okay, the charting platform here in front of me. I'm hoping you can see that. Maybe we just look at the straight at the kind of the US indexes and how they're opening up. All right, they'll have been open for about 12 minutes now. But just based upon what we saw at the over the weekend, I thought it might be worthwhile just spending a moment or two to look at how that's played out. So of course, last week was a rather interesting week, certainly for, I was going to say for American markets, but really for the global markets, is because what happens with the American market sets the tone for the rest of the global markets. And firstly, last week, as I said, we had Mr. Powell speaking at his Senate hearings last Tuesday, Wednesday. And the comments that he made there about how they may still raise interest rates, and they may carry on higher longer than people had expected. That was the first thing to throw markets into a bit of a tiz, shall we say? And we saw a distinct sell-off there, okay, to start. And then what we had was, as I said, we had started to get the unfolding drama of Silicon Valley Bank, SVB, but also along with Signature Bank and Silvergate Bank, which are my understanding, and I don't consider myself an equity specialist in any way, was that certainly Silvergate, etc. They were very much focused on the sort of the crypto space, but Silicon Valley Bank was quite a well-known institution, and was a particularly I think it might have been America's 18th biggest bank. Now the number, you may have got that number particularly wrong, but it was a significant player, and just the nature of it, okay. And I know that it had issues because even friends of mine who work in Europe or in the tech space, they had exposure to SVB and stuff. So the tentacles from its fallout were long and probably have still not completely completed. We will see more information about coming out, I have no doubt, over the next few days. But then of course that had an impact on the confidence as the bank unfolded, all right, literally, but also in terms of how the Federal Reserve, the Treasury, the regulators, politicians have come to deal with it, both in the US and elsewhere. But I'm hoping you can see here, what I've got here. I'll just bring up my drawing tool here. Is this is just a section of some of the indices and commodities that I keep an eye on. And what we have, this is the Dow on the daily. This is the Nasdaq on the daily. This is the S&P 500, the Russell. Okay, the German DAX, the Japanese Nikkei, but also the UK FTSE 100 here, and that's what, just as a very quick insight into actually how this is all played out. And excuse me, if just look at the S&P 500, I'm just going to zip into here. Is that what we were looking at here? Let me just bring up my drawing tool. Hopefully, is that we'd had sort of the week before last year, we'd had a little bit of having had a bit of a double top there, hopefully, and price had rolled down. We rolled our way. Okay, we did try to climb up, and then we put in what was a pin bar off the 20 period moving average, where it switched. It's flipped from being support to being resistance. Then we had Mr. Powell's comments, and we can see the sell-off that carried on from there. That is an evening star formation, okay, which I think we've covered before, and then we can see for ourselves that price just continued down, and this is for today, okay, on the Nasdaq, okay. Even if we look at the sort of electronic early morning market, we can see that from Thursday afternoon, we had Thursday afternoons, Friday we had a sell, we had tried a bit of a rally there into around the NFP numbers, but you can see for yourself that it fell. And then, as it became clear that the FDIC, the Fed, had put in in place basically to ensure that deposits in SVB, etc., were covered. We had a little bit of a rally there in the start of the overnight agent session, but you can see for yourself that has continued down. And what we're looking at here is the reaction of it, and if we were to look at not just relevant to NASDAQ, but to the Russell and the SP and the Dow, looking at the overall state of, let's say, the US banking sector, which you could look under the ETF XLF, which will give you just quick snapshot of the overall sector, and you can see that basically the prices there, okay, last week, and since last night's opening into this morning, getting ready for the main US Open, you can see that is basically there was a real distinct move down. And we saw that it had impact across into Europe. This was the German DAX. I'm hoping you can sort of effectively see there, okay, having we kind of gone a little bit sideways, but we rolled over, and hopefully you can see the price action there from the end of last week, and you can see this morning, okay, and that's a reflection of most of the European indices which followed the DAX there. And what we did is we came all the way down to this big round number to 15,000, okay, to 50,000. That was particularly clear. You can see that if we go down to the 1 hour chart. We gapped up there to start, ran up into resistance, and then you can see prices collapsed. And now I would see prices being supported, and it's pivoting around 15,000, big round numbers. Okay, they're always worth being aware of. I always want to draw in the big significant numbers, because markets remember, and they reflect that. And we had a similar move to here onto the FTSE in the UK. Price had been in a price had been in a pretty good uptrend. Okay, here we go. We'd had a start here, and touches here, and what we'd had is we'd had a break. Okay, we'd had a break, and then price had tried to come back up and retest, but it couldn't get up and kiss it. So that in itself, the fact it couldn't get up and re-kiss the trend line, was telling us that maybe they're running out of steam. But you can see for yourself how price rolled over and fell away there over the last few days, and this week that has continued. Okay, beneath the 50 period moving average. That's an indication of people's unhappiness about it. You can see there on the 1 hour chart there how it's done, and it's dropped down to what's that, around about 75.50. Okay, 75.50 area there is probably putting in double bottom. We can see there is at the moment there is support being seen on that. Okay, and that's clear. That's clearly important. And before we just look at the intraday US indices, have a look at what impact did that all have on the US dollar as well. Well, excuse me. Let's have a little look at the chart for the US dollar index. So remember, the US dollar index, okay, is effectively the dollar against a basket of currencies, the majority of which is the euro, but all the other major currencies it trades against are seen in there. Also. And what we've seen, is there's just basically, kind of moves that we probably need to look at just updating our chart on this particular one as we're just getting ready for it. Just maybe switched across to the June contract. Okay, we'll do that. Let's just bring this up. That might help us. Let's just find it. Here we go. That's the boy. There we go. So what we can see is that last week, we had rallied back up into the sort of 50 period moving average, but you can see we'd had an inside bar followed by a rejection candle there. And if I go down to the daily chart here, is that we can see we were running a bit sideways into the Mr. Powell's Senate hearing, which basically gave it a huge boost. But then actually, as the SVB came out, we started to roll around. Why would that have an impact on the dollar? Well, of course, it has a little bit of an impact on people's beliefs about the US economy, but also just a case of that, when those banks unravel, it means that the likelihood of more 50 basis point rate rises in the US, they're probably off the table for the moment. Okay, in which case that just basically is not necessarily that is more bearish to the dollar, and you can see that is how that is basically fallen out. And now we're back here down to the 50 period moving average there. If I go to the 4-hour chart, having rallied up strong after Powell's comments, we topped out. Okay, and we topped out there. Okay, in a double top. And then you can see for yourself the price action there, and then this afternoon that is in the 1-hour chart, that is just continuing. Okay, we at the end of the open of the Friday session tried to rally back up, a bit of profit taking, but then we gapped down and we tried to run up, and we've continued. We start to the US session, we're starting to move to those new lows. Okay, and that will have an impact on other currencies, in particular the euro against the US dollar, which is kind of inverse of the dollar index. We can see that we'd had a few weeks of a nice downtrend, and then kind of last week what we had seen is this is effectively a bullish engulfing candle bouncing off the 20 period moving average. If we go down to the daily chart, that's putting in effectively a double bottom there. Okay, and we can see that's just that there's been kind of considerable dollar bearishness and euro strength that's come into that. And of course, if we see that the ECB raises interest rates on Thursday, and by 50 basis points, that will probably be stronger for the euro against the US dollar if they're intimating that there will be more interest rate rises across Europe. But the price action we can see is, whilst the trend is up there, it's not exactly, I wouldn't exactly say it's massively pretty. Okay, but you can see there is that's an evening star formation at the end of Friday, but we gap up. We double top there. We came down to the 50, and we've come up, and at the moment there's lower highs there. Okay, it's creating lower highs there. We'd want to watch how that plays out over the start of the particular US session. It also had an effect on cable. Why? Well, because actually quite a few companies, if there was issues with the US finance sector, that would have a knock-on impact to the UK economy. There's very much aligned there. Also, quite a lot of companies, basically, had deposits with SVB. Okay, so all of these things, have an impact. And interestingly, what we had seen was, I think I've been talking about it to my own work, is that we were getting ready for a bit of a move. We've been pivoting around 120 on pound against US dollar, and I've looked at it as actually drifting lower just based on the price action, and it was at the start of the week. But then basically as it played out, let's go to the 4-hour chart. It initially dropped down from 4-hour chart. Okay, there was very strong dollar, weak sterling. But as the week turned around, okay, you can see for yourself that basically that dollar weakness came in. Sterling has rallied up and has continued to. Okay, this week at the start of this session, we had a rally. We had fell back to support, and we've continued there. Okay, and actually, there's a particularly nice trend, it might not necessarily be the, I think as a trend line, it might not necessarily be ideal, but there we go. Just here what we can see is that it's touches, lots of touches there, but it didn't even come back down to it before it's bounced. That's probably an indication of some sterling strength that's going on there. Okay, and yeah, that's what we're looking at. That we're going to push to new daily highs as we go into the thing, and that's a representation of the weakness of the US dollar. So let's finish off just by having a little look at the intraday charts of the US indices. Okay, as we start as we look to particularly start the sort of session here, and this is what I have here as we talk about this, is that bang, we've got the Dow, the Russell, the S&P 500, and the Nasdaq there. And I'll just look at this on an intraday basis, clear this up. And remember what I always say is that I normally basically, the American markets have opened about 25 minutes ago. I normally, for at least sort of the first 15 to 25 minutes, let the markets sort of wash out the volatility from the opening, and that's what we're kind of starting to see here. And I'd look at, if I look at the Dow on that 15-minute chart, what we've seen is, let's see, is that interestingly, we had the sell-off there this morning during the European session, but you might actually say, Paul, there's a bit of an inverse head and shoulders there. You might say, Paul, there was actually a bit of a 1, 2, 3 bottom there, okay, which price rallied up to the 50, and now you've got the 50 acting as resistance, and then the 20 acting as support. Okay, so as we've just seen the market opening there, price is getting ready. It looks like it's starting to move a little bit higher, and that might just be people having a little bit of relief rally after what they thought might happen. Okay, in terms of a major rollover. It's probably a little bit too early. What we'll do is watch between 3 and 4 to see what the kind of the real take is on that. But it seems to be it seems to have washed its way out this morning, and we seem to be kind of rallying up there a little bit to begin with, and actually we can see the same across the others. Nasdaq having here we go, having fallen strongly there, okay, during the European session. Although we've double bottomed there, that's a key reversal. That price pushed to a new low, but closed above the high of the previous candle, and we're pushing up at the moment. Okay, we're pushing up into the opening of it. So I would be just basically, here we go, just watching this to see how this plays out on that 5-minute chart. I see that as a very nice double bottom just before we're running into the US Open. Maybe that's just taking the sting out of it. And I'll be looking to see how does that play out. The 1-minute chart's not terribly pretty. It's a bit messy in that block there. Maybe we just need to, as I said, wait to see how into 3 till 4, UK 3 till 4, okay, and also sort of US 10 till 11 to see how whether we get a particularly good strong move off it. Okay, and I'd be waiting to see that. Okay, as people start to analyze the information that happened over the weekend, but then also analyze the Federal Reserve's response, and how people sort of how people see that. So it's going to be an interesting session. I would suggest that this next hour is where we might see some interesting moves. Okay, on the shorter term intraday basis, as we sort of the market digests that news and gets ready also to be ready for US CPI data tomorrow. So there you go, ladies and gentlemen. We'll draw it to a close there. Okay, we've certainly covered quite a lot. Well, certainly covered quite a lot there today. Lots going on. I hope you have found that session useful. I hope that's given you a little bit of help and insight, A, onto trend lines, and B, what we're looking at today. It's going to be an interesting session and an interesting week. All right, so just to ensure that you're always managing risk first and foremost when you're looking to do that. As always, I wish you the very best of success in your trading endeavors this week, ladies and gentlemen. And I hope you will join me next Monday for Monday Market Matters London 2 p.m, where we will redo the Trading the First Pullback session that we did at the London Trader Show on Friday afternoon. Have a great trading week, everybody, and I will speak to you soon. Cheers.